Good morning, everybody. Good morning, good morning. We'll get started in just a moment. Alright, so I'm going to look at SPY here. And actually I want to look at the daily time frame for a second. The 5 MA should be pulling up towards that 744, potentially even that 746 range. So that's going to be the first step of kind of getting our 5 MA into a bullish position. Sorry, I have all these lines set up. So that's the first thing I'm looking at. Secondly, we drew this out on stream last night, where we were targeting that this could potentially be a cup and handle to the upside, or this was going to be this right shoulder getting ready to break down. Now, I'm not too certain on this right shoulder just yet, even though it does look fairly good, because we did not close the inverse cup. And because we didn't close that inverse cup, it still looks like pretty dang good liquidity for the downside. Let me set this to the Sim49. Good morning, everybody. Thanks for joining so far. Just kind of looking at the SPY for a little bit. Does look fairly bearish. Can't see this turn bullish though. So if we see this cup to the upside, then we'll know basically that the short positions aren't going to be working out very well. So we're going to mark that. Do it like that. So those are our upside targets currently. But again, this doesn't look that great for the upside right now. We definitely do have the liquidity for this head and shoulders. And we definitely do have the liquidity to have a fairly large push to the downside today. But one of the other things we have to look at is semiconductors, because semiconductors are building that same pattern, well, except they They're seeing the right shoulder kind of break out rather than break down here. See how that's turning into a pretty well-defined cup and handle. So we can see a rejection from semiconductors and see this pull down. However, it does look good towards the upside. Another thing we do have to be concerned about is that even if this doesn't turn into that head and shoulders, this still can be an inverse cup and handle. So even though that upside looks good, this still can pull down pretty hard today. But I don't want to get too bear biased yet, even though we are seeing quite a lot of liquidity being pushed that way. Because again, semis are sitting in a very large, potential cup and handle situation here. Okay, so another thing that's really positive here is that we have not pushed this down all the way to this 749. So far we have a higher low, which that is bullish. But we don't see the same higher low within this range right here. So we're going to mark this trend line today. Place that at support. So we have to break out of this range if the market's going to be bullish basically. So let me delete some of these drawings just so it's not such a mess. So what we will be looking for is basically, are we going to pull up to this line and then reject? Or are we going to basically break out of this trend and start pushing some of this upside? So I will be looking for the short position when we do get up to that basically 752, 40-ish range. But if we break this trend line, then we can fairly safely cut short positions and start targeting the upside. Trying to see what support they're trying to target here. This is going to be at this 753.90. It's very likely in there. Okay. Sorry, I'm super tired today, so I'm not going to be trying to take a whole bunch of day trades due to that. But we will engage in some. Now, if we do push up to this upper trend line, the potential to push above that line is pretty large. So if we don't see a rejection in that range, basically we can take those short positions at that 753, basically 754. And if we don't break above that, then this trend line will, continue pushing us to the downside. Yeah, that's what we'll be looking at. Now, I was asked if the Novo 50 calls are still good. I definitely think so. You have a smaller cup being formed there. You already have the larger cup. This is building additional bullish liquidity to push that upside. And the upside is, very large. Potentially all the way to that 62. Okay, so let's check our positions here. So American Airline doing good. DraftKings puts doing good. USO puts doing good. We did hedge a Exxon call for next week at the 750 strike. But this is basically just purely a hedge. Okay, so I want to look at volatility today. So 88.27, 88.15. Let's check the HIG today. Yesterday was around that 80.08 range. So we are seeing the HIG pull down slightly. I want to take a look at QQQ really quick. Now QQQ did not close that cup at that range we were expecting. But they did close a smaller cup, which is fairly bullish. That is looking good for the upside to the 736. Now I want to look at semis. This is potentially giving us a call entry here. But I want to see if we break down to the 750-10. Because if we do break down that 750-10, then that will be forming an inverse cup. However, if we basically bounce at this range, then this creates the liquidity for a inverse head and shoulders. So if we bounce here, I will be taking a couple calls, which it's looking very likely. But I want to check semis really quick while this is going on. Yeah, this looks like it's going to break out, so we're going to go ahead and pick up a call here. Now, I'm taking a 751 call, which is, you know, fairly close to in the money. But if we do break down, then I will cut that position. However, I am targeting this 752.97. So that will be kind of the first target. If we continue bouncing here, then this will be breaking this potential bearish structure, which is, you know, exactly what we're looking for. So I'm going to put a market conditional order on this call at the 752.91. Okay, so that's good. Now I want to look at American Airlines here because we do have positions in that. It's currently at 15.98. So a lot of our calls are basically a couple cents from in the money. So I do want to set up some orders on those. And again, we're targeting the 1649. So setting conditional orders for that 1649. We are seeing semis pulling upward. They did close that cup, very likely building a small handle here. You kind of see this forming here. So if we push up to the 611.70, which looks super likely we're going to do, then we should expect a small rejection from that range before continuing to head upward. So that's good for our SPY calls. Now I am going to make a Google Sheet where I do post basically all these positions and edit them in real time. So that way everybody can just keep that open and follow exactly what I'm doing. Was going to do that last night, but I did not have a chance. Now, they did not fully close this cup here. And this is on semiconductors. And potentially for SPY here, can head down to the 750.10. So let's see what our volatility is doing. Volatility is pulling down, so it's at the 87.72. And the HIG is buying upward a little bit. So as long as we don't close this cup to the downside and basically head down to that 750.10, then I'm going to be continue holding this call. Now we do want to see a bounce out of semis fairly soon here because we don't want to see this inverse cup close to the downside, because that would definitely weigh against our call position. Now we are seeing the ADL pulling down. Same with the SPY here. But we are seeing it kind of flatline a little bit at this range. Did pull down to the 750.10, or the 750.15, which is very, very close to closing that inverse cup to the downside. Seeing a little bit of buying out of semiconductors. Which, if we do continue to see the buying, then that will invalidate any of that bearishness that was taking place. Kind of same thing here on SPY, but SPY does have to push up quite a bit further. We basically need to push to this 751.57 to really invalidate some of this bearish structure here. Now I do want to see this trend broken to the upside and basically invalidating this bearishness. But we do see that cup closed there. So it's very likely we're going to push to the 611.70. Smaller cup closing there. Should expect a handle before heading to that upside. SPY here, I want to see this smaller cup closed at the 751.07. From there, we would work on a handle to then push that 751.57. So everything's looking fairly good right now for a call. Okay, there's that cup close. The larger cup just closed as well, so we should be expecting a small handle downward before continuing to head up. This should allude to this cup closing at this 751.57. So all good signals we're looking for here. If we can get that cup to close, then we can fairly reliably target that 752.97. Okay, I can finally look at chat. How's everybody doing so far today? And we are bullish. We have broken this right shoulder, have closed this cup at the 611.21. So that's exactly what we're looking for. Now this can allude to pulling down and forming a handle before pushing, much further to that upside. Again, we have our stop loss, or not stop loss, but market conditional order set to the 752.91. So I'm actually going to write that above this. CO 752.91. We'll put that in the center. Now we need to build a handle off of this cup, and then very likely continue to the upside. Price action on drip calls for tomorrow aren't really gaining. Yeah, at this point for those drip calls, and I'm sorry you're just hearing this now, but we talked about this last week, that basically we should be pulling out of those drip calls for this expiry, the June 18th, and we should be moving a large majority of those positions to the September September 17th or whatever strike or expiry it is. Hold on. Drip, drip. September 18th. The 5 calls for that. Those are the ones that we're really trying to load into. Now I'm going to look at, hold on. The HIG is continuing to buy up, so that's good. This is definitely a bullish signal. And very likely we see volatility not exactly pulling down. It did pull down all the way to the 87.09. Now it's currently at 88.12. So I want to look at SPY and see how much a 750 put's going to be right now. The IV on these are very, very high. is cup closed, should be expecting the handle to the upside. As long as we don't see, this pulling down like crazy to close some, inverse cup, then we should be expecting the further upside here. Kind of same thing with SPY. We did close this bullish cup. Should be expecting the handle to the upside. But I just want to watch semis just in case. Now we should be expecting a bounce fairly soon here out of semiconductors so that it doesn't invalidate the bullish structure. So I am expecting that to occur here. Watching for this 606.56. Okay, inverse cup did close, which that's definitely not bullish. But we definitely see the bullishness still holding on SPY. Now again, this still can be this handle, even though we do see this inverse cup. It's not what we want to see. But this smaller cup here still is holding. So if we do have a bounce here on semis, we can expect that push to the upside. But now we have to invalidate this potential bearish structure. Which means that this can pull downward. Basically, it can form a handle to the downside. So now we need to see the price pull all the way back up towards this 613.49 to invalidate the bearish structure. On SPY here though, it does look fine. This looks very good for that cup and handle breakout. We are seeing the ADL starting to pick up. Now obviously that can change if, semis continue breaking down. Which means that I think I'm going to use SOX S as a way to hedge today. So I'm going to take some of these 4.5 calls and I'll type it out in a minute. Okay, so let me type that out. 5 calls on Soxs for this Thursday. Hedge position. Can be seeing this breaking down, which I really don't want to, but it's something we have to contend with regardless. So really looking at that 606.65 here. Now for SPY, this first level we need to hit here, again, is this 751.77. That will kind of tell us whether we're going to be bullish on the day or not. For semis, that level's a lot higher. It's at this 613.49. So if we could see semis breaking out, and if we could see the SPY break out here, then the upside for our calls are going to look just fine. Our gold positions are up quite a bit. Again, on this portfolio, I only took the 10 shares of GDXW, and it's currently up $12, which that's awesome. Volatility is still fairly elevated currently, and even though in the grand scheme of things it's still very low, it has been picking up, pretty much since the low of the morning. So that can be alluding to a push to the downside. So we do see that breakdown on semis. Base clear brain there is where I'm expecting. That's the what? The 604.68. Now this is starting to look like it's going to close this inverse cup to the downside, which is not ideal. Semi's pushing down quite hard here. Potentially they want all the way to the 601. SPY did break our earlier bullish structure, which in the grand scheme of things isn't very good at all, because this can be a very large inverse cup and handle to the downside. So now we have to contend with that, which means $7.49. So we could target that 7.49. So we're going to enter a put just as protection, just in case we do push down to that 7.49. Because we do have semis. Getting very close to this 601 range so far. Now for semis, we still have this cup formed, so this can still turn bullish on us. For SPY though, it is looking fairly grim. Now this can still be bullish here, as long as we don't pull down to this 749 and basically start finding some support, because this still would be a cup and then a handle at this point. We just have to be very, very cautious that this can form into an inverse cup fairly quickly. And basically head down all the way to that 749. But we are starting to see semis bouncing. And I want to see our volatility. It's at 88.91, basically the high of the day. So we're just going to continue holding the call and the put, because again we do have a fairly large range on the day. HIG is selling a little bit. So I want to delete a few of these drawings here just so that we can see what's going on. So if we are going to get our major downside today, we are positioned for that. I have a 749 put, plus I have those 4.5 calls on Success. So that would assume this forming a cup and handle, continuing to the upside. Volatility is at 88.90. Now let's see what's going on with QQQ. QQQ still has a bit before the bullishness is invalidated as well. Now again, as bearish as the day seems so far, this can, swing to the upside fairly quickly. But we do have to see some levels broken. We do need to see on semiconductors the push back to the 613.49, which might seem far away, but for semiconductors, that's really not that far at all. For the SPY here, we need to see this push back to the 751.77. Volatility has pulled down quite a bit. Never mind, right as I said that, pulled back up. It was at 88.50, but it instantly pulled back up to 88.91. Now for this downside, I would be targeting the 748. Thank you. So if we are going to be heading to the downside, then that's kind of our downside target. So still stuck between these ranges. Now, one thing I don't care about too much, but SpaceX is selling off a little bit, which, that is a fairly large amount of market cap, which I'm not sure if SPY and everything had to buy into it just yet. I'm not exactly sure when those dates are going to occur, but I do know that eventually SpaceX is going to be a large portion of the SPY, QQQ. Now I want to see the HIG. HIG is at 80.06. We're seeing the ADL pick up on the HIG as well. And we are starting to see the ADL picking up on semiconductors. Same with the SPY here. Now, I don't really care about the put being down. shows the put being down $50 compared to the call being up, basically only 10. Not really concerned about that right now, because once the call does head up to that range, this put will basically stop losing value. Volatility still very elevated, 88, 85. Watching semis very closely here because if we break down semis, then we're, going to break down SPY. If we have our upside breakout in semis, then we're going to have the upside breakout in SPY. So very important to watch. Now, the one situation I don't want is us being range bound, basically stuck in this area all the way to FOMC. That would not be ideal. Can delete these because those are no longer valid. Volatility still remaining very elevated at this 88, 84. Now, with semis pulling down on the 5-minute time frame to that lower Bollinger, that can create buying to the upside. So if we don't see this pull back down and form additional bearish structure, then this can start heading upward. Kind of the same condition here with the SPY. We did have that lower Bollinger push, which can, create that upside condition. The big mistake that I made today so far was that I should have hedged the 749 put up here. But I did not. And because of that, I'm going to be paying a little bit for that on the day. Now semis, we do need to see buying all the way back up to the 613.49. So we still have quite a ways to go before things get, bullish. For the SPY, we need to see that buying all the way to the 751.77. Still a little too soon to say whether we're going to be seeing the bullishness or not. But semis are looking fairly good. So I do want to take another call towards the upside. And that will kind of properly hedge against this put being down so much. So if we continue seeing buying to the upside, then we will see invalidation of some of this bearish structure, and everything will look good to go. But we do need to see the continued buying. Again, semiconductors still need roughly that whole $5 more upside, which that really isn't a whole lot for semiconductors. That can happen very quickly. I mean, today was a perfect example. We pulled from 613 all the way to the 601 very quickly. So if the market is going bullish, we do really have to see that range. So have that marked out. For SPY, we really need to see this 751.77 because that will invalidate some of this bearish structure we have been seeing. Volatility still elevated, but not at the high of the day. It was at 88.93, now it's at 88.78. So I am looking for this to start ticking downward to kind of confirm that we're going to be bullish on the day. And the HIG is still kind of in choppy waters. It did pull down basically to this 804. It's still at this 804. So we do want to be seeing buying out of the HIG. Volatility's at 88.80. Semis still need that $4 of upside, $3 of upside. For SPY, it's 40 cents. Now, if we can get this 751.77, then I will be again looking for that 752.91 for the exit on the calls. Volatility still elevated. It's at the 88.81. Again, we want to be seeing that pulling down if we're going to be, really seeing bullish price action out of the day. The HIG is at 80.05, so slowly buying up. It's looking very likely we get our level here, but I don't want to say that too soon yet. QQQ, what's going on with QQQ? QQQ still needs to see about $2 of upside. So we need to see this 735.57 broken. Volatility ticking upwards slightly. Now we have not gotten this level yet, and remember that's super, super important that we do, or else we're still trading into bearish structure here. Same for semis. The ADL is starting to look good though. Seeing, quite a lot of buying so far. The HIG is still looking fine. Volatility needs to drop already. And we still need about 30 cents more on the SPY to invalidate some of that bearish structure. Semis only need another $3 of upside. But they're looking very good so far. QQQ only needs 90 cents more. Seeing a large spike in the ADL. Volatility did tick upwards, so it's at 89.23. Not exactly what we want to see. That rhymed and I really didn't intend for it to. Semis need another $2 of upside. And SPY is securing our level. So that's great. Perfect. We did close the cup here. So from that cup closing, we can now anticipate the handle before pushing to the upside. Now I do want to make sure my market conditional order is set on this other call that I took. And I'm going to set it for that exact same level. So the 752.91. Okay, and that should be good. But volatility is still elevated, which means that dealers are hedging positions, which is, overall bearish. Semis, we do need to see the push to the 613.49 just to fully invalidate any bearishness on semiconductors. So again, with SPY, we are expecting that slight pull down to form a handle before continuing to the upside. Semis here still need to push that 613.50. Need about $1 upside left. And QQQ did close that cup. So from that cup closing, can't expect a handle before pushing to the upside further. If we're really going to be seeing our upside, then I do expect volatility to start pulling down. Again, it's still very elevated at this 89.28. Now the thing with semis here is that this inverse cup to the downside did not close, even though it got very close. It still didn't fully close that range. So we still have this very large cup formed. We had the bearish structure, pulled us down, and so far this could be that handle to the upside on that cup. Which, if that's the case, then our upside on today's pretty large. Potentially could be going all the way to that 629. If we actually see the full breakout. Volatility has pulled down slightly. And HIG is still buying upwards. So I'm going to cut my 749 put here. Even at a loss, I don't really care. And I'm going to hedge with a different strike. So I'm going to use the 748 to hedge at this point. Okay, so while that's going, I want to go ahead and look at some of these other positions. So our DraftKings puts are doing very well. They're up 55%. American Airlines is down very slightly. Our gold shares are absolutely killing it right now, up a whole $19. Our plug calls are finally gaining weight. Tesla positions still down. WTI positions doing good. And our CVS positions are finally not bleeding as bad. Instead of being down, roughly 60 a contract, now they're only down 29 a contract. So that's starting to head in the correct direction. Now with semis, again, we did not close this upside cup just yet. And because of that, this can still turn bearish. So we do have to be cautious of that. But I am kind of attributing this towards those handles on QQQ and SPY building. So as long as we don't see, a massive pull down, then that won't invalidate the bullish structure so far. Volatility is picking up, so it's at the 89.57. So if we continue seeing this pick upward on the day, then that's going to be, very bearish. And we are seeing a little bit of selling out of the HIG. Did pull down to the 80.03. It's at currently 80.04. So volatility still picking up. It's at 89.69. If we do head down to the 749.65 range, hold 749.61, then that will invalidate this cup that we've been working on. Starting to see some buying again out of semiconductors, so that's good. And volatility has pulled back very slightly. So again, we are trying to see if this is going to form a handle rather than, creating full bullish or bearish structure to the downside. So we are expecting a bounce fairly soon here, with semis starting to buy. That's, looking like a very high potential. QQQ did pull down to the 732.88. So kind of same thing out of QQQ, looking for a bounce. But so far that's looking pretty gross. Volatility is at the 89.99, so very large increase in volatility today. It's at the 90.01 now. Now if we see the breakdown in semiconductors, that'll turn the day very bearish. But if semis can hold this range and continue pulling upward, then that would pull us out of some of the selling, which so far semis are holding, fairly well. Again, they did pull down all the way to the 601. But hopefully we don't get an invalidation of this cup and handle. And I want to see the HIG. The HIG is at 80.02, so pulling down very slightly. Sorry, I haven't had a chance to look at the chat too much. Now, if we do see semis starting to buy here, that would kind of save the market. So that's what I'm really looking for. Because either semis start picking up the selling, and that would, cause the SPY and QQQ and everything to reject their ranges and head to the downside. Or we're going to start seeing some buying in semiconductors and break us out of those ranges. Volatility still is at 90. It's looking very much so like he wants to break down here. Yeah, so that's super likely going to pull down. Okay, validated our bullish structure and formed that inverse cup. So since we formed this inverse cup, I will be looking for some of that upside reprieve to exit the calls, so we're not exiting them on a total loss. Should strike this 749, form that very large inverse cup to the downside, and then build a handle. During that handle formation, that's when we'll tack on more puts, sell the calls. So on semis, I'm going to be looking for basically this push to the upside. And anytime we hit that trend line, just going to enter additional puts on SPY. Same thing with that trend on SPY. So for the calls currently, we are going to be looking for this basically 750, 98 range to exit, even though potentially we can pull up all the way to the 751. Volatility is at 90.52. I have to change my market conditional order here. I still have it set on the calls, so I'm gonna push it down closer to this 750, 751 range. But now that we essentially closed that cup, um, looking for the handle to form, and from that handle formation, we'll tack on more puts and then push into the downside. So I definitely messed up today trading a little bit because I should have entered that first put up in here. And I was being hesitant because I was just seeing the bullish structure, and because of that, did not hedge the put at that range. We pulled down. I then took a put in that range just in case we started pulling down all the way to that 748 range. Had the bounce, exited that put kind of in between that bounce. I did add on the 748 put at the top here, which that's doing very good, but I needed to add on that 749 put at the top earlier today. So that was the big mistake that I made. Which I did say earlier very likely would cost me, so. Starting to get a big push down. And with this push down, we're just going to go ahead and start exiting a couple of these calls here. Especially the 752, I want to be out of that. And we did hit the bottom of our trend line. Which actually kind of gives us a range to add a couple calls here. As much as I'm wanting to exit some calls as well. So I did add one of the 751 calls. And we will be basically writing that to the middle Bollinger. We have our put side good to go. So now we are positioning a little bit in that call side for the upside reprieve. And I do want to set my market conditional order to 750.83. Yeah, we'll target that. Okay, so that's what we're going to do for our call exit. We're going to target that 750.83. And I did enter, again, another 751 call when we hit the bottom of that trend. Now, when we do exit the calls, very likely I will try to tack on another couple puts here. Calls are starting to gain some weight. Okay, so let me take a look at semis. Now again, for semiconductors, this is not a cup and handle. Okay, this cup did not close, and it's kind of riding this upside um, resistance pretty hard. So I am looking for the market to basically hit that level, reject back downward. Now we do have our market order set to the, or the conditional order set to the 750.83. I want to move that down very slightly to the 79, just because the 20 MA has pulled downward slightly. Now if we continue seeing semis buying upward, this can take us all the way to that 751. But again, I am kind of expecting semis to pull upward and reject back downward. Each time we've hit this resistance level so far, we've rejected it. So I don't think this time will be any different, but I can be proven wrong. Gonna move that back up to the 83. Just because we are seeing our 20 MA starting to pull back upward. Now for semis, top of this level currently is about at that $12 range. So if we do see that level broken, then we can start to potentially work with some bullish structure. But it would need to pull all the way up to the 613.49. So currently we're well positioned. We did have a little bit of a blunder earlier, but we did take some puts at the top here, took additional calls at the bottom. Now we're just waiting for the movement basically. Now volatility is probably very elevated again, so let's check. It is at the 91.32. And we are going to have to change our conditional orders back down now that the 20 MA is pulling back down again. So I want to set it to the 750.71. Now I'm not wanting to take additional puts yet because again, we are at that lower Bollinger on the 5-minute time frame. It's usually not when I want to take puts. You know, that was a mistake I made earlier today, and it cost me. Usually when I do that, it costs me. So not taking additional puts at this range. I am expecting some of this upside reprieve prior to entering additional puts. Here, I'm gonna go say bye to my daughter really quick, and I will be right back. Alright, sorry about that, I'm back. Okay, so we're just riding our lower Bollinger. Volatility did pull up all the way to the 93.14 today. It's currently at 91.69. This trend line is holding super strong. Basically every time we hit it, it pulls the price down. Now if we could just get a little bit of upside reprieve here, that would be very fantastic. The HIG is at 80. Volatility at 91.52. SpaceX has a ton of selling going on. But I am expecting some upside reprieve. The market has been sitting in the lower Bollinger for quite a while now, roughly for a whole 25 minutes. Seeing the ADL picking up a little bit. Now today the market conditions are definitely pretty sour right now. So we do want to make sure we get an exit on these calls. So I'm going to change the market conditional order to 750.53. Basically, I want to be a whole 10 cents underneath the 20 MA. Just in case. And I will update this. Should see semis pulling up towards that 611 range again and then rejecting downward. Now the reason why I entered or I exited that 749 put earlier is because I bought in when the IV was very, very high, and even currently it'd be up very slightly, but not really enough to be a quality hedge. Just was not entered at the opportune time. Would have been totally different if I entered it when I needed to up here. Then that position would have been, a very, very strong position. But definitely paying for that today. So volatility is at the 9180. So very elevated still. Now if we don't start seeing the reprieve fairly soon, then we will need to move our orders down once again. We're seeing semis pulling back up to this range, very likely getting ready to have an additional rejection. HIG is at the 80.02, was at the 80. QQQ getting very close to their upside reprieve, so it'd be nice if we could get that on SPY. Now, one thing I do want to start adding on these upsides for semiconductors is basically every time we get to this top range, I want to add some of those success calls. Today might be one of those days where we just sit in the lower Bollinger the entire session, which is difficult. My calls are getting destroyed pretty bad right now, but it is what it is. We will find a way to navigate those calls one way or another. Now, if we do pull back to this 747 range again, I will be adding an additional call and basically just looking for that upside reprieve. So even with today being bearish, we should still be seeing that coming eventually. And with that upside reprieve, that'd be basically when we exit the calls, enter additional puts, and really just position for the entire downside. So we're probably going to have to adjust our conditional orders here. Very, very, very choppy on the semis. But again, every time we hit this top range, I'm basically adding to the SOXS calls, which are essentially semiconductor shorts. I am looking for the 20 mod to be retested fairly soon. That'll be when we exit the calls, add additional puts. I'm going to move the market order to 750.41. And I will hold one of the 751 calls just in case we push above that. But if we don't, then I'll just, sell that very, very soon after. It's assuming we head up anyway. Actually not down a whole ton on SPY right now. It looks like it with the PNL, but a lot of this is because of oil pulling upward. And of course my portfolio currently is very, very heavily positioned for oil shorts. So any upside move um, definitely pulls a lot of weight from my positions. But if we could see our upside reprieve here in SPY, then I would actually be close to positive on the day. We're back at that upper trend. Now, if this breaks, which I don't really expect it to, but if this breaks, then that could really open up the upside today. But I'm not really anticipating it to break. But if it does, then that'll be good for our call positions. So, oh, and we did have it break very slightly. So we'll see if we head up to the 613.49. And again, with the calls, I am going to be stopping the majority out at this 20 mo. I'm not going to mess around with that. Um, but I do have one of the 751 calls just in case we do start pulling up above that. So that would be ideal, but we're going to, target that 750.41. Now for that additional call, I would want to see semis basically pull all the way up to the 613.49 to really tell us that we are going to, see that continued upside. And semi is having another rejection. So we're going to move that up slightly. Now our volatility Still at 91.85, so still super elevated. Got very close to the 20 mile, and this might be one of those days where we get very close to the level and reject it, which I won't be happy about, but we will have to contend with that regardless. But ideally, we do close that range, get our exit on the calls, and we are seeing semiconductors starting to buy up a little bit, so again, if this pushes up to the 613.49, then this is still a very large cup and handle potentially. We did not have a full-on rejection down here of this level. So that could still be very much in play, as terrible as it looks. But regardless, we're still going to use that 20 mile and we're going to adjust the price to 750.31 because we do want to catch this range. But this is still a very strong resistance range on semiconductors. Volatility at 92.14, so starting to pick up again. So still looking for that 20 mile level. Some good news just came out with the conflict though, that potentially they're going to move up signing the deal for today. Rather than on Friday. So we'll see if that works out. But that should be a fairly bullish catalyst for the market. So we'll see how that works out. Volatility still at 92.15. And the HIG has been buying, so it's at 80.05. So if we could just get our upside reprieve here, that would make the day a lot better. I don't really want to enter additional puts or anything until we actually push up a little bit. I want to look at what's going on the 1 minute time frame here. So we did have that massive pull down, but from that, we technically do have this cup built. And this is a terrible looking handle, but potentially this still can be a handle to that upside. So it'd be nice if we get our upside reprieve already, so that we can enter more puts and toss these calls. I do expect a lot of chop prior to FOMC, but it doesn't mean we still can't get our level, so I am looking for the 750.24 to hit. That would close a smaller cup. And the ADL is looking fairly okay, as gross as the day is so far. Volatility has pulled down very slightly, but it's still super, super elevated. I did change the market conditional order to that 750.24, just because that would be the top of that smaller cup. And that coincides very well with the 20 mile level as well. And again, I will be holding the, one of these 751 calls, just in case we push up to the, upper range of this trend line. I don't really expect it, but doing that just in case. And I am going to take a very light entry of the 740, probably 748 call or 748 puts when we do exit in like 20 cents here. Yeah, so when we hit that range, what I'm going to do is I'm going to keep the 751 call, keep the put going, and add into the put very, very lightly. And this gives us a good range on the day. Okay, so I did exit majority of those calls. Again, I'm still holding the additional 751 just in case. I did add a 749 put here, or 748 put here, excuse me. So either we're going to push upward towards that upper range, and then very likely add additional puts at that level to pull back down, or we'll see a rejection at this range, and from that we'll go from there. So I'm watching this call very closely, because if we are going to have that rejection, then I want to pretty much instantly sell that call. I do not want to be holding calls into a day where we're just going to be selling off. But I will be looking for that 751.84 if we're actually going to, have that continuation into the upside. So very likely we see a rejection because again, we're kind of continuing to have rejections within semiconductors and we have not been able to close some of these bullish structures. For example, right here, this is not a cup and handle. It just looks like it, but this range has not fully closed that cup. And because that cup hasn't been fully closed, this handle is not valid. Volatility is at the 91.82. So basically at this point I'm looking to see if volatility is starting to pick up, if we're getting a rejection off this 20 mile range. If we do get the rejection off that 20 mile range, then we can, really start targeting that 747.85 again. If we see volatility picking back upward, then that'll tell us that, those puts to the downside are going to do pretty well. But currently I'm hedged very, very, ideally. I have two of the 748 puts going against one of the 741 calls, or 751 calls, excuse me. So either we head to the upside and that call prints very hard, or we're going to pull down and those puts are, basically going to go bananas. And again, we're not going to cut the put or cut this call until we have a really firm, um, grasp that this is going to be rejecting. We are seeing volatility picking up very slightly, but I do want to see a fairly large spike to tell us that, yes, we're going to reject this range and start heading back down. Okay. Blundered a few of the trades today, but we are making progress. We're actually down only about $40 in SPY today, even with those pretty major mistakes earlier on. So I'm very pleased with that. Now again, semis can turn bullish here, so we're looking for that. The ADL has been picking up very, very massively. So if we see a continuation within that, that would close that cup. And closing that cup would be, bullish for the entire market. We still have a ways to go on SPY before, we could really say things are bullish. We would have to basically pull up all the way to the 752.15, close that entire cup that, we've been struggling to close all morning. So this is why I'm still holding the call. This is why I'm still holding the puts. And once we do get up to this trend line, I will enter one additional 748 put. But that's if we fully get up to that trend line. We have been forming a ton of rejections in here. Now, this larger cup has finally closed on semiconductors, which that was at the 12, basically 1272. And volatility is at 91.79. So again, I do want to see a basically leg upward into volatility to really tell us that yes, we're going to continue heading downward. So until I see that, I'm not going to cut this call. Volatility picking up very slightly. Oh, there's that big push upward. So I'm going to go ahead and take out the call here. So just getting out of that. And now we are just writing the SPY puts. So watch this just absolutely fly now. But I'm actually going to take a cheap upside hedge against these puts. And to do this, I'll just take the 753 call. So we do have a put bias on today. I am expecting this to basically form a rejection to the downside. Volatility is at 91.94. And semiconductors have been once again rejecting this range. Even though we do have this cup formed, it's still way too soon to say that this is going to turn entirely bullish because we still have to form this larger cup if we're going to turn bullish with semiconductors. So I'm perfectly okay with that. Now, if we do get the massive downside rejection that I'm kind of expecting, then I'm basically going to expect us to pull all the way back to the 747.85. So that's where I'm going to set my market conditional orders on my puts. So I'll put it less than 747.87. So that's set up. And then the upside target for this call would be that 751.88. So I'm going to set the market conditional order. So that's 751.88. Well, let's set it to 751.83. Okay, now our SPY contracts are pretty much set. Volatility at 91.85. And let's see what our HIG is doing. HIG is at the 80.04. Now again, semis can be forming that handle to the upside. Volatility at the 91.86. Sorry, let me look at hood. I haven't had time to look at chat the entire time. Well, Jin, I still hope your daughter has a nice birthday regardless. But let's look at hood really quick while the SPY chops. Now, do you have contracts or shares, or what do you have going on here? Now, on the weekly time frame, this is telling you that we have very likely another week um, of pushing to go. So very likely a higher high into next week. Daily time frame, however, I don't think yesterday closed above the upper Bollinger. No, it did not. So today is looking like the upper Bollinger day one, which means that we would be anticipating a higher high come tomorrow. Especially with that 111.43 being right in view. I think that's a perfectly reasonable target to look at. But you are within the upper Bollinger. Technically, you know, that is telling you that yes, there can still be a little bit more bullishness, but that is starting to hit the end of the road. Now I want to look at what's going on with the HIG. Excuse me, I don't mean to yawn. HIG is at 80.03, seeing a little bit of selling. Has not closed that cup. In fact, we do have an inverse cup built here on the Hig as well, which can allude to, further selling. Semiconductors are starting to look pretty strong here. Again, we do have to hit that 613.49 to really break out of this bearishness, but it's looking very good. This is looking very much so like that cup and handle to the upside. For SPY, we also have a smaller cup and handle built here. Oops. Have that into that to a smaller one. So we'll see if we get the breakout or not. I'm really not anticipating it, but we're prepared one way or another. Volatility has pulled down slightly, so it's at 91.70, but still extremely elevated. Starting to see the ADL tapering very slightly. Don't worry about Hood, you sold. Okay. That works. Yeah, I think it's a reasonable place to sell at, so. Puts are starting to gain some premium. So I know it's a little hard with how my screen's set up because I have the price in the right hand corner. But you can see where I have the call and put on the side here, where it's showing the basically, I can't talk, profit or loss on that position. Now, the puts and the call were fairly even not too long ago, but now the puts are starting to gain in premium. Doesn't mean a whole lot yet, but it definitely could mean that people are getting positioned for the downside. I'm gonna mute just for a couple minutes so I can drink my coffee and eat my breakfast really quick. But if anything major happens, I will be, turning my mic back on. So I will be right back. Sorry about that, I'm back. Okay, so we are seeing semis breaking out a little bit, which it's super likely it hits that level and closes that cup. And we have been seeing volatility pulling down fairly aggressively, so it's at the 9104. Still elevated, but it has been pulling down. It did hit the 9314. So it's looking very likely we're going to get our upside break here. Now you can see the put premium is still somewhat building. I know it shifted right as I said that, but even with us pushing upward, these puts have been holding their weight super strong. Volatility's at 9114. Excuse me, I think it pulled down to the 91. It was like 9102 or something, 9104. So a small uptick in volatility, but nothing very decisive just yet. A lot of this bullish structure has been breaking out, but we still have, quite a bit of room to the upside before we really can call this bullish. Because again, this is a massive inverse cup, and from that massive inverse cup, we are expecting a handle to push down to the, further downside. So determining where the top of this handle is going to be is really crucial. And even if we do form a smaller cup here at this 752.13, we still have to pull all the way back up to the 752.97 to fully invalidate that bearish cup. Semis are looking very likely again to fill that bullish cup to the 613.49, which that would be a handle for this larger cup. Now, if we do start seeing volatility picking up here, then I will try to enter a few more puts, but I'm not going to until we see that happen. And very likely we will pull to this upper Bollinger first. And the upper Bollinger is at the 751.29. So when we get to that range, that'll be very close to that top trend. And I'll be looking to enter an additional put into the downside on that. Now what I'm kind of expecting here on semis, even though the bullish structure looks really good, I'm expecting some of these to start forming inverse cups and basically invalidating the bullish structure, and from those inverse cups start breaking down on the day again. Volatility is at 91.18. So again, still not anything super decisive, but it does mean that dealers have hedged positions to the downside today. And because we're not seeing that basically pull to the low of the day, which was at that 87 range, then that means that dealers still have positions open, which can definitely allude to, further downside selling. But currently we're well positioned, whether we get the upside or downside. We're fairly set on those. I want to hold these puts. The puts that I have are the 748 puts. And even with this upside we've been getting, my puts have been holding strong on their premium. I'm looking at some of our other positions. So our DraftKings puts are doing very nicely. Those are up 51% currently. The American Airline calls are up 34%. Now, I did take a put on TGTX, Target Therapeutics or whatever it's called. That's for July 17th, and that's a 48 strike put. Position is down slightly. Our USO puts are up a little bit, but not, anything too remarkable. They're up 15%. Our WTI puts are still doing very good. These TSLL calls are down quite a bit, but I am expecting those to pull back upward. Same with our SMCI calls. And again, I will be posting a Google Sheet where I put every single trade so everybody can basically monitor those in real time. I'll try to get that set up tonight, but I can't promise just because we do have the class tonight and I do need to prepare for that. Where is my silver call? Silver call's down very slightly. but I know that my gold positions have been absolutely killing it, so I do expect silver to eventually follow suit, especially when we start seeing oil really pulling down. Okay, let's check volatility. Volatility is at 91.20. So again, if we do see it pick up, it can invalidate a lot of this bullish structure. And in fact, it's looking like we're going to get an inverse cup here. From that inverse cup, I would expect a handle to continue pulling downward, validating some of that bullishness. Inverse cup has closed, was at the 750.33. So I'm expecting a very small handle on that before continuing to head downward. So I really like our puts here. I think our puts are going to do very well today. And technically semiconductors have rejected this top slightly. Doesn't look like it in the grand scheme of things, but that like 30 or that 15-cent range still definitely matters quite a bit, because this still technically is not a bullish cup until that gets filled. And remember, we didn't see this filled in that range either. Okay, so yes, we formed a cup here. Basically formed a cup at that level. But we still haven't completed some of these additional cups up here. And because of that, that can lead into rejection. But if we are going to get some major downside rejection, then we are expecting volatility to pick up. Currently it's at 91, hold on, it moved, 91.17. So again, I kind of expect that to start moving up towards that 92 range to really tell us that yes, we're going to be seeing some selling. The HIG is still at the 80.03. Starting to see a little bit of selling in here. And again, on the HIG, we did have this very large inverse cup close. And because of that, we're kind of looking for that handle to the downside. So we still have a lot of range to basically cut through towards the upside if we're really going to have that upside breakout. On semis, we have closed this smaller inverse cup, so very likely building that handle and then getting ready to take out this next range. So basically we should expect this to pull down to there. And from that range, sorry, there's going to be a lot of boxes. And from that range, we can start to anticipate this move down to the 605 again. Now we still have a while to go before all of that occurs, obviously, but that's kind of what I'd be expecting. This cup to close, or this inverse cup to close, build a handle, head downward. We have 2 hours until FOMC. Well, hour and 45 minutes, excuse me. Now, I am expecting volatility to start picking up again because I am seeing this smaller head and shoulders building, unless we see it invalidated fairly soon here. But this is looking very likely to take us to the downside. Semiconductors starting to take that gap a little bit. Again, I am expecting it to pull down basically to that 1027. Volatility slowly ticking upwards, so it's at 91.17. This would need to pull back up to the 750.96 to invalidate some of this bearish structure that is building here, which really isn't that far. Volatility is starting to pick up a little bit, so it's at 91.25. Again, that move to the 92 would definitely show us that we're very likely going to see a pretty large downward move. Volatility's at 91.30. Okay, now we did invalidate some of this bearish structure here, and we did form a cup. Now, if we do see the big breakout to the upside, and we do see this cup closed, then I still won't be exiting the puts yet. And the primary reason why, besides FOMC, is that with the top of the cup, we expect downside before continuing to have additional upside. So we would find an exit within the puts in that range somewhere. But that would give us a good call exit and an additional put entry. Should be pretty choppy until FOMC. Volatility is pulling down a bit, so it's at 91.14. I'm still surprised how well these puts are holding up. That means there's a lot of people buying puts currently. Yeah, the 755 target's very reasonable. That would be the top of this cup that we're trying to target. Well, it would form a cup anyway. But that's 755.27. We're starting to see a lot of buying into SpaceX again, which is important, because it has a huge market cap. And if we're seeing buying into SpaceX, that's very likely alluding to buying into the SPY, semis, tech, everything else. Won't always be one-to-one, but it is a good signal for, the potential upside here. We did have some of those earlier blunders in the day, but I'm actually fairly happy with how the day's been going so far. A large majority of the downside in the PNL is primarily due to oil positions, which they're super, super dated. I'm not worried about those one bit. Hold on one second. Sorry, I'm back. Yes, we're still holding puts. Ideally, you should be positioned in a call and put, um, based on kind of how choppy today is. Currently, I have a 753 call against the 748 puts, and the 753 call is holding its weight against those two puts really well. And the puts are also seeing a lot of buying, um, even with this push to the upside. As you can see, you could see the actual P&L on my puts here. Um, this has been shifting from red to green, even though we've moved up basically a whole, $3. These puts have still been holding very, very strong. So there's a lot of interest in them. But volatility is still pulling down on the day. It's currently at 90, 97. Again, for reference, it was up at the 93 something. Semis are just kind of giving me some conflicting signals though, because we haven't been able to close this top range yet. And because of that, um, that can mean that this entire structure is bearish. But it's still too soon to say that. Potentially right now we're getting ready to push that level. So we might just cancel that out right as I'm talking about it. But we need to hit that 613.49. That's really, really important. We're kind of in between the middle, Tummel, so the upside is really good, but the downside's really good too. Um, because basically we're going to be pushing into either that 752 plus, or we're going to be breaking back down to the 747. So there is a very, very large room on the day so far. Now, the puts have been gaining a ton of premium. Um, you know, we've only moved down not that far, and the puts are, starting to climb again. So a lot of people are buying puts right now. I also want to check the gamma as well. Keep forgetting to save that link on my laptop. Basically, I had to wipe my laptop like 2 weeks ago because it wouldn't turn on. So let's see, 0DTE, GEX. So there's a put wall at the 750, and there's a call wall at the 753. So that does make it kind of hard to push underneath that 750 when the put wall's there, because it's going to be in dealer's best interest to basically be trading in between that range, which is telling us that currently this is basically our range right now. So unless we start seeing that major breakdown, break past that 750 put wall, which that explains a lot why these puts are gaining so much premium. Um, then we're basically going to be chopping at this level for quite a while today. But we are starting to see bearish structure, and again, this is the 1 minute time frame. Doesn't really mean a whole lot. But if we see continued bearish structure, so if we pull down to this, what is this, 70 or 750.31, which it looks like we're going to do any second, then that will close a smaller inverse cup. And from that smaller inverse cup closing, we look for the handle, from the handle into an additional inverse cup, rinse, repeat, rinse, repeat. And we still have not been seeing semis able to claim this top range at all. It doesn't look like very much, but that 15-cent range is very, very crucial. And we've been just flat out rejecting it. Now, if we continue downward, we'll aim to close another inverse cup. And basically continue heading down. So very choppy, but it is fairly structured today. Showing an ADL spike, but we're seeing a large selling candle. And our volatility is at 91.12. Let's check the HIG. HIG is at 80.04. So waiting for a really decisive break to the downside before we really see the gamma shift or volatility pick up. Now again, if we can break this 750 level, that's going to be very, very good for the puts because there is a very large put wall at the 750. So that would, heavily allude to having a very major downside from that point. So if we can break that 750, I would expect volatility to start picking up pretty aggressively. Now, I'm only going to be streaming for another few minutes here. I might turn the stream back on later though, closer to FOMC time. Not entirely sure yet, but usually on Wednesdays I spend my mornings with my wife. Um, and again, I'm streaming because there's no market on Friday, so trying to compensate for that a little bit. But with that said, does anybody have any questions about the day, about any symbols or anything like that before I go ahead and close off the stream for at least the current moment? Can't promise I'll be back later, um, but we have our targets on the day, okay? And if you need to take a picture of this, you can. I'll delete this trend line and everything so that the image is a little clearer. But that's what we're looking for. We're either looking for this major breakout to the upside, or we're looking for the major breakdown. We do have that put wall at the 750, so pushing below the 750 is going to be a little difficult. Doesn't mean it's impossible, but it's going to be a little difficult. And we do have a large call wall at the 753. Okay, which means that when we do start pushing to the upside, that 753 range is going to be very tough to break past until we at least see the gamma shift. Now, volatility is still pulling downward. Um, I, I am expecting this to pull upward towards that 92 range if we're going to be getting our selling. And for semis, we have still not closed that gap to the upside. Now this downside push here is building some good structure. Basically would expect that level to be taken out next. So that's looking good. And volatility is slowly starting to pick back up again. So it's at the 91.26. Yeah, always make sure we hedge our positions. I know I've made that same mistake, even done it on stream. It happens to us all. but always try to make sure to have an upside hedge, okay? Because some form of upside hedge is better than nothing. Um, I am seeing our downside starting to build pretty nicely though. If we could see semiconductors really start to reject, start closing off some of these inverse cups to the downside, then that would really, you know, tell us that we're going to be heading down on the SPY and everything. And remember, with the SPY, we do have this very large inverse cup. Okay, because of that very large inverse cup, we have been anticipating a handle to the downside. Okay, if this is going to be that handle, then it will take us all the way to that 747.87. Lots of sevens. And there is a major put wall at the 750. So if we can actually break this level, it should push us down pretty hard. But again, it is in dealer's best interest to basically trade in between the call wall and the put wall. So that's kind of the range, but again, we can definitely see selling pick up quite heavily here. Volatility is at 91.21. So again, we do want to be seeing that pulling up towards that 92 to really signify that yes, we're going to be going downward, because we want the dealers to be hedging the downside. You know, that's going to be one of the main indicators that tell us that yes, we're actually going to be getting the downside, is when we see the actual dealers starting to hedge for that downside. Dealers hedging the downside means that they'll usually be buying some of those VVIX futures. And we do expect to see some selling out of the HIG as well. So it's kind of what we're looking for. All right, everybody. Any final questions before I head out? I just want to state that our GDXW shares have been absolutely killing it. Very happy with that purchase. The dividend hasn't been super great the last couple times, but we have been seeing gold, you know, absolutely pulling down massively. But this dividend's usually about anywhere from 50 cents to 70 cents a week per share. So with gold starting to reclaim a lot of weight, we should be seeing these shares treating us really, really well. It's like one of the highest dividends out there. Um, when it actually, you know, reclaims some of that gold weight. So it's very, very good. I like those equities a ton. Yeah, you're very welcome. And I do apologize that I did make a couple mistakes this morning. Again, I didn't hedge here like I should have. I should have opened that 749 put at that range. Instead, I opened it like in that area. Oh, it didn't do super well. Um, Even with that downside, we didn't get a whole lot of weight out of it. The contract IB was basically really toasted. Um, After we entered in it, chopped to the upside. But you're definitely welcome. I enjoy doing these streams and working hard on this challenge portfolio while still trying to trade my main portfolio. Has not been easy, but we'll get it. I'm not too concerned. Even on today with the SPY, technically I'm green on the SPY today. The only reason why the portfolio is down is this stupid CVS call, or not call, the CVS puts, and my oil positions dropping very slightly, but they're still technically all in the green. So just waiting for the oil puts to reclaim weight, and that'd be, you know, the majority of why we're down in the portfolio. Same with those CVS puts. I do want to see those reclaim their weight as well. Okay, everybody. Thank you so much for watching. Can't promise I'll be back at FOMC. I'm going to try, but I can't promise. But with that said, if I don't see you for the rest of the trading session, then I hope everyone has a great trading session. We know our targets. Just keep a very level head and don't get shaken out because there's going to be a ton of chop in here. Okay, but these contracts are going to be pulling their weight today. Either those calls to the upside or those puts to the downside. Just make sure you do have a couple positions going. Tommel, this is specifically for you. This is a great time to hedge some of those 753 calls against those puts because I know you do have a mountain of puts going. This is a very, very ideal time to, if you have to, take a couple profit on those puts, get a couple of those calls to hedge the rest. Okay. But yeah, with that said, thank you so much for watching, everybody. And either I'll talk to you today or I'll talk to you in the class if you're going to attend the class tonight. Again, that's going to be at 8 p.m. Eastern Standard Time. Tonight's class is super, super important. And if I don't talk to you today or tonight, then I will talk to you in tomorrow's stream. So take care, everybody. Trade safe and don't get shaken out of your positions early because today is FOMC. We will be getting a fairly adverse move to the downside or upside. So just be prepared for it. All right, everybody. I will talk to you in the next one. Take care.